So if you look at how we're doing today, right, so we try to figure out where are we in this process? Are we going to come out of this? How are we going to do? If you look at what's happened through the first 3 quarters of this year, we've had about $11.5 billion of sales, on pace for 15.3. That'll be about 25% below where we were last year and 73% below the peak. Now, dollar volume is something everybody tends to talk about. It's more relatable than number of transactions, but number of transactions really is much more indicative of the health of the market and activity in the market, because very large transactions can skew those dollar figures. We look at number of transactions. We've had 179 deals over 10 million in Manhattan so far this year. So that's on pace to be up about 6%, still about 50% below where we were at the peak of the market. But there's one nugget that came out of the third quarter stats that I found very, very interesting. When we look at how markets react and how markets change, there is always a period when the market is transitioning and there's something that exerts downward pressure on value. That first year always has the same dynamics. And the dynamic is that value appears to be holding okay, but volume drops like a stone. And why is that? That's because the folks who have their properties on the market and are able to get their price transact. And the people who don't get their price don't transact. So what happens? You have a divergence. And Steve, I know this isn't in the appraisal handbook, but I'll tell you, I believe that in that particular year, there is a difference between comparable sale value and real value. Real value is lower than what the comparables project about the market. And the appraisal handbook will tell you that's not right. That doesn't exist. Exactly, you don't know what you're talking about. I'm telling you it does exist. And there's a certain percentage of the market that's in tune with what real value is, certain percentage of the market that's not in tune with real value. Transactions still happen at the non-real value, creating comp value, but real value is lower. Most people bid at that real value. Sellers don't capitulate. And you have this dynamic where value seems to be sticky, transaction volume drops off. That is the quintessential year in which you have this transition.